Hey guys, almost the new year. So again, we had a change up this week on topic. We announced last week we were doing the multiple vendor price list. We can get to that if I have an outpouring of, yes, I want to talk about multiple vendor price lists. But I had a couple people actually reach out about the enhanced inventory receiving, that they had questions around it. So I thought I would just tackle that one today. It's about to be the start of a new year, so maybe the start of a new process. So we're going to go ahead and take that one on. So just so that you guys are aware, we do have a YouTube channel. It's youtube.com/Fourlane, where you can watch all of our videos. There's about 200 videos up there. Some of them are from 2011, honestly, but they have the same concepts, right? So QuickBooks has improved over the years with features, but some of the base concepts are still the same. And there's more being added every day. Our weekly webinar series that we're on right now is up on that YouTube channel as well. So you can subscribe there and it'll notify you, I guess, of any new videos that get added. We're about to add about 300 more videos that we had not made public before. So definitely go in and take advantage of that. Okay, enhanced inventory. What we're going to be talking about today. Hopefully, so a lot of our series have been around inventory, manufacturing, wholesale distribution. Some of the things that we're going to be going into in 2022 are going to be around construction as well. Just so you're aware. So the purpose of today's is to kind of give you a high-level overview of what enhanced inventory is. It's a very confusing thing. When you go into QuickBooks, right, we have this edit and preferences, and under items and inventory, they have advanced inventory, but what we're talking about today is enhanced inventory. So enhanced inventory is available in all versions of QuickBooks Enterprise, Silver, Gold, Platinum, and Diamond. Advanced inventory is only available in Platinum and Diamond, right? So it's not something that is one of the higher level subscriptions. I really wish they would change the wording on this, what it really is, because it's just inventory receiving. They'll need the enhanced in there. But let's talk about what this is. So once you turn it on, you can't turn it off. So be sure, if you are going to go through and test these things, take a backup first, take it into an offline copy before you do this. If you've been using QuickBooks for a number of years, then it will take a long time for this process to run to turn it on. Once it's on, it cannot be undone. Okay, so you just want to make that very clear. A lot of our clients will start new files for them every 4 or 5 years, or condense down their data every 2 or 3 years type thing. And so this is a good opportunity before turning this on to do a service like that, because basically what it's going to do is it's going to run through all history of every bill you've ever had. And if there is a transaction on items tab versus the expense tab, right? So on a bill, expense tab, items tab. If there is a transaction on the items tab, it is going to create a separate transaction called an item receipt, okay? So we're going to talk a little bit about what that looks like now before you turn on, and what it looks like after. So before, without enhanced inventory turned on, you have a bill and an item receipt. They're all one transaction. When I go in and I enter a item receipt, right, it's just a check box up top here whether or not the bill is received with this. So I go in and I put in an item receipt to Kaler's Hardware for this inventory part. I'm receiving 50 of them, and I say save. Behind the scenes on this transaction, what is happening? We come down to our trustee transaction journal here. Accounts payable is going up, right? Crediting, because accounts payable has a natural credit balance. And then materials inventory, so our inventory asset account is also going up. It's a natural debit balance. So that's what happens behind the scenes on an item receipt. So an item receipt is hitting accounts payable. However, so Kaler's Hardware, let me put in here a reference number so it's easy to spot. When I go in there and I go to vendors pay bills, and I filter for all bills by Kaler's, see that bill is not going to show up here because I have not checked that box to say bill received. If I go in and I look at my accounts payable, AP aging summary for Kaler's, the item receipt does show up in here, even though the bill isn't received. So it can be a little confusing. This is the normal process, right? When you go into a purchase order, you can receive items with a bill or without a bill from the home screen, right? Receive inventory with bill, without bill. But regardless of the one you choose, you're still going to be affecting accounts payable, okay? In order for me to get it to show up in the vendors, like where I go to pay bills, I just have to check this bill to be received. When I check this bill to be received, it does not affect the financials at all because it's still a credit to AP and a debit to items. Okay, so no effect on that. So I say save. Now when I go to my transaction journal, again, no change. But when I go to vendors pay bills, now I have that bill in here for me to pay. Okay, so this is the normal process without enhanced inventory receiving turned on. How this can be problematic and where we've run into this being problematic in the past is when you have a different accounts payable person than an inventory person, right? So I have somebody who we enter the bill prior to them shipping it out because we have to prepay for inventory. That can be a problem, right? If I enter the bill as is, because when I enter this transaction, this date of this transaction is when my items are going to be showing as in my inventory, even if we haven't received them yet. So if we're in manufacturing or even, wholesale distribution, anything having to do with inventory, and we're looking at quantity available for sale, right? Let's flip it back to just being an item receipt or a bill or whatever it is. It doesn't really matter because it's the same thing. It's going to show that I have those quantity on hand. So if this is a prepaid situation and I really don't have those on hand, that can be a problem with fulfillment because I don't really have those on hand yet, right? The other time when we see potential issues is when maybe it comes into the warehouse on 11/30, but the customer doesn't bill us until 12/15, or the vendor, sorry, doesn't bill us until 12/15. So then when I switch it over to a bill, I'm now going to show my 12/15 date because I don't want to pay them before I have to pay them. And it's going to take those inventory items, though, and from 11/30 to 12/15, they won't show as a quantity available for sale. So if I had sold them during that time frame, so say I shipped out 25, 11, or 12/3, then my inventory will have gone negative. And you never want your inventory to go negative in QuickBooks. Okay, so these are some of the times when you could potentially run into issues. So how do we know quickly if enhanced inventory is turned on also is if you look at this home screen. So if it goes purchase orders, receive inventory with or without bill, and then enter bill against inventory, if this is what your home screen looks like, you have that, you do not have enhanced inventory turned on. What we're going to do is we're going to go through the process to go ahead and turn it on. So you have to be admin or have company preference access right in here. I like how they're really promoting landed cost in there. And then you come on down here to enhance inventory receiving. So first of all, when you get a warning inside of QuickBooks, right, we should always pay attention to those warnings. It's really important to do that. It's really important to do that. So you want to just make sure that you're paying attention here. So the first thing it says is you can't turn it off. So that's really important to note. You cannot turn this off once you turn it on, because what it's going to do again is it's going to go and take every bill that has an item section on the bill, and it's going to split it, not an inventory item, not an assembly item on a bill, an item, right? Other charge, service item, whatever it is. If it has an item on a bill, it's going to split it and make it into two separate transactions. Okay. So you want to make sure that you cannot turn it off. There is no undo except for returning to a backup. It's good to go in and play around with it. Consider the following. When QuickBooks updates your data to work with this preference, it changes transactions, including those in a closed period. Okay, so if you have the period closed, it is still going to go back and split the bill and the item receipt. Okay. The other thing that is important to note when it comes to this, because really there shouldn't be a big difference, right? Because when we look at it, let me go to my, what are the debits and credits when we turn it on? When we look at it, right, when you do turn on enhanced inventory, it credits AP, which is exactly what was happening in the old situation. It credits AP on the bill, and then it debits a receive not invoice account. Okay, and then when we enter the item receipt, since it's a separate transaction, it debits the inventory or expense account that we have and credits that receive not invoice. So it really takes this same transaction, splits it into two transactions, and creates a clearing account. That's all it does. However, because if you guys watched our video from a couple weeks ago about how QuickBooks handles the debits and credits of inventory and the value of inventory, this item receipt that's going to be created, right? It's going to take the bill. All bills that have an item on it for all history are now going to be credit to AP, which is normal, and are going to be a debit to receive not invoice. And it's going to create an item receipt that is going to debit inventory and it's going to credit receive not invoice. So what we learned a couple weeks ago is that how QuickBooks counts inventory valuation, right, or the average price, perpetual average price on inventory, the value, is that it does it first by date of transaction, which the bill date and the item receipt date, when you enable this, will be the same. It's not going to change the date. It's going to create an item receipt on the same date as the bill. However, inventory valuation inside of QuickBooks is date of transaction, then created date of transaction. That's the order, right? So because this item receipt is being created today versus whenever that bill was created 6 months ago, it can throw off and swing, right? It can be a swing to inventory valuation on those days. Oops, I need to click forward into that. Sorry about that. So that's the only thing that you really have to be aware of, and it'll give you a report to show you what those variances possibly are. Okay, so where it could have an effect is if we had multiple transactions to receive inventory and sell inventory in the same day, there can be a swing on your average value going backwards. So again, something to be aware of. And again, it'll show it to you. We'll look at this in a second. The other thing, so it says here, if you enter a bill for items and use different costs than the ones on the item receipt, QuickBooks changes the cost on the item receipt, even if it's in a closed period. So what that's saying, we'll look at this in a minute, is that when we make this change on the item receipt, it's going to pull in the cost noted on the purchase order, right? However, if when you receive the bill in, if that's at a later time, if on the bill the cost changes, it will update the item receipts cost even if it's in a closed period. And it will not ask you for a closed period password. So again, awareness is key. This is why a lot of people say they don't like this. This fact that it changes in a closed period, most of my clients who actually use this, it does not affect them. This is not a big, huge effect on them, but awareness is key. Okay, so you'll have to use item receipts to receive in any non-inventory items, service items, anything that's on a purchase order. You will have item receipts and bills, anything that's going to go on the items tab. So again, awareness. And I actually like this a lot because if you're creating purchase orders, even if you're not actually receiving an item, like somebody having an item receipt and a bill lets someone besides accounts payable acknowledge receipt of these items, even if it's not an inventory part, or receipt of services, even if it's not an inventory part. The process to convert your file can take a few minutes to several hours. So if this is 20 years of data and it has to create an item receipt for every single bill, it can take some time. That's just a warning. And QuickBooks will create a backup. If you change your mind, you can restore this backup. So we always read these. Okay. Also, it says, lets you do this, but it's not a good idea. Right? It can affect previous periods, previous tax returns. So if we're doing this, it's good to do it with help or to go in and run your balance sheet and profit and loss historically to make sure if you need to do any adjustments, you can. I'm going to keep pushing forward. The other reason that it does, a lot of people don't like doing this is the reconciliation process. Let me just get through all the backup part. Is there is a reconciliation process that we recommend, but again, a lot of people don't like doing it. Awesome. Okay. Well, let me just go into a file that's already turned on. I didn't do it in my sample file this morning because I wanted to show you guys the process. But it, of course, always in a demo or a workflow. So I'm just going to go into a file that I already have it turned on. But there is a reconciliation process that we recommend. Not everybody enjoys having to do that extra step, that extra reconciliation process. Let me get into a file that has it turned on already. Okay. Just give it a second here and it'll load it back up. I always like during a demo when it decides to break. I have heard a couple of things around QuickBooks 2022. So I'm wondering if I just discovered something in here. Also, I'll try it on a sample file later, another sample file later, or I'll try it on my actual demo file later as well. But let me just show you the results here. I'm going to flip into my 2021 manufacturing file, which has all the same stuff. And show my screen again. Okay. So how do we know that we have enhanced inventory receiving turned on? Well, sorry guys, taking me some time to get this loaded up. So let me see if I can turn this on. Yes. Okay. And I'm clicking around here so you guys don't have to watch me like hunt. But I paused my screen. So let's see if it'll progress on this one. Nope. Okay, well, maybe I'm not going to be able to show it today. I don't know why. I should have tested this ahead of time, but we've always done it in a sample file. Let me try one more sample file. I don't know why it is making me have these barriers today. Well, while this is loading up, let me go to a couple questions. while I'm poking around over here. So there was a question about how often do you do a full backup and an incremental backup? That's a good question here at this time, right? As I'm trying to go through this. So you should be, so inside of QuickBooks, when you do backups, it actually resets the transaction log. So when you, because it's expecting, right? It's like a transaction log kind of just holds the data that you have entered into the system until you do a backup. So doing a full backup resets that transaction log. That transaction log can get quite large if you haven't done a full backup in a long time. So we recommend doing it for larger files weekly. For most people, they don't actually have to back up data because you have like a server backup. So like you could restore your server at any time. They've got mirrored servers. They've got all sorts of things happening in their host environment. But the doing in-process backup or product backup is super important because it resets that transaction log. So going through that process, even if you have full computer, full system, full server backups, it still is important to do that inside of QuickBooks. So let me see here. It's just going through and backing up data. Yeah, wow. I don't know if there's some kind of update that happened. That is just not letting me open it up. Let me try one more thing. So I can show you guys the results here. I'm going to go into a different sample file. Yep. All right. Let me see if it's in here. I might have just uncovered. I love when I do these things and I think, oh, well, I've done this a million times. There's no way that there's going to be a problem. I demoed it a million times. So there's no way there's going to be a problem. And then I just rely on my knowledge here. I should have tested it. Let's see. So on the home screen, I can just talk you guys through it. On the home screen, when you get into the enhanced inventory receiving, it's not going to have those two. There we go. Yay. All right, I had to go all the way back to my 2020 file. There we go. It looks a little bit different, right? So I have purchase orders and receive items. I don't have this receive items with or without bill. I don't have this extra step of enter bill against receive items. I just have receive items and I have enter bills. Okay. So that happens when you roll out enhanced inventory receiving. It changes your home screen slightly. The other thing that happens when you roll it out is that you go into your chart of accounts and it creates a new account for you called 8800 or 88,000 received not invoiced. Now in this, you cannot change this account type to be anything other than another current liability. So for some of our clients that do this as prepays, right? Like I prepaid for inventory, they use the receive not invoice account, and then at month end close, they move the negative balance up basically to the other current asset and then reverse the transaction. You can come in and change the number if you want to. You can also change the name if you guys call it something different, like prepaids. I mean, you could change it to whatever you want. Okay, but it has to stay as an other current asset or other current liability account. So you cannot change that. Okay, so those two things happen when you turn it on. Now, when I go in, I'm gonna do it from a purchase order, but I don't have to. But when I come in here and I say, all right, I'm gonna have for Kaler's Hardware this item added. So let's say 25 of this item. And I'm going to put it in here at $14. So I'm creating a new cost. The original cost you can see is $75. I'm putting it in for 14, the rate for $14, right? So it'll show it as a change when I move forward, okay? So let me come in here. So I go home. Now I'm going to receive against this purchase order. I could go in and just select item receipts or create item receipt from here too. But I'm going to do it from the home screen because a couple weeks later, I've received these items in. And I now go to Kaler's. It says I have open purchase orders. There's the purchase order I just created. Now notice I can change the date of this item receipt. So I can make it 11/30 as an example. I can put in a reference number. I can attach a file. So if we needed the warehouse to attach a file, we could do that. quantity 25 boxes came in, but there's no price. I can't put any price in here, right? No price on the item receipt now. I can go ahead and say save though. Oh, I have to assign a site. I've got a site here turned on. Then now it's a couple days later, whatever it is, and accounts payable, who's not the warehouse, so this would be happening, item receipt would be happening in the warehouse, comes in and says, hey, I got a bill from Kaler's. Okay. Now let's say, you know, oh, it's against purchase order 71. Let's say on the bill it says that they shipped us 30. So this is, first of all, my first little check and balance for a warehouse to be telling accounts payable through the system what was actually received. They would say we received 25, but Kaler billed me for 30. It's a little check and balance in there that we can have, right? Also, if the cost changes, so when I come into this item receipt before I go in and save that other bill, you can see behind the scenes what's happening is it's crediting that received not invoiced account and debiting materials inventory. So still hitting another current asset account, just like it would have if it was in our old way. It's just not accounts payable. It's hitting received not invoiced. Still debiting inventory. Inventory is still going up on 11/30. So when I come in here to the bill, and let's say that they changed it to $15. All my pop-ups, and I'm going to do this on 12/15 now. When I save this transaction, what we see behind the scenes on this transaction, oops, not transaction history, sorry, transaction journal, is we see accounts payable goes up now and received not invoiced. So it should be a wash in that received not invoiced. But before it was $350 on the item receipt, right? Because we had received it against the cost of the PO. Now, when we go back to this item receipt, once I've entered that bill, it now changes it to $375 because the bill will kick back to the item receipt what the cost is. And that's where you have to have awareness, right? Even though it was in a previous period, I didn't have it closed, but even if it was in a closed period, it would not, it would have updated that transaction in the closed period to the $375. Okay. So that's that closing date transaction awareness that you have to have. Why this is super helpful though, and why I promote it, I know a lot of people, even internally here at Fourlane, not a lot of people promote it. I love this feature because it allows me to have checks and balances. It allows me to have the warehouse do what they're going to do. They can receive their items in when they're going to receive their items. When they go in and do an inventory or a cycle count or whatever it is, it's going to be more accurate when we do it this way than any other way. Okay. It allows accounts payable to be responsible for their part without affecting warehouse. The two positions can be segregated and not have to fight over each other because they're two separate transactions. So I like it. Now I'm running up against time because I did not expect that little snafu earlier, but I'll just show you one real quickly, this last step here. So the last step that a lot of people don't enjoy is the fact that we should be, as with any balance sheet account, we should be reconciling this account. And we don't reconcile it to a subledger documentation. We don't reconcile it to a bank statement, obviously. What we're reconciling it to is we're reconciling it to an in and an out. So when we reconcile to an in and an out, we should be reconciling to zero, right? Because what we're saying is we're saying, oh, I have an item receipt from Kaler's for $375. I have a bill from Kaler's for $375. Those two wash each other out, and I can clear these out, and the difference is 0. So it allows us to go in and reconcile so that we can see which items have we received we have no bill for, which items have we billed that we have no receipt for, and helps us to keep things a lot cleaner. Now, again, a lot of people have complained about having, some immaterial, if you go into some like 5 decimals deep, right? Some rounding errors. But I mean, it's usually an immaterial difference when we have some rounding errors that we just adjust out. I've seen a lot of complaints around that too. But I have lots and lots of clients that are using this to make sure that they are allowing accounts payable to be separate from warehouse. So coming up next week, I was going to do the job costing inventory issue tickets. So something that I had also somebody asked me about last week. And then go into the multiple vendor price list and continue on down. If you guys have other topics that you really are wanting to see, please let me know. I did have somebody ask me when we're going to do multiple vendor price lists, and I'll send them a video because I've done a webinar on it before when it first came out, but we'll retouch on it in a couple weeks. Please let me know if you guys have anything else that you want covered, though. As always, we're always here at Fourlane focused on getting you data to make decisions. And that's all I got for you guys today. Sorry for the technical difficulties. I'm going to go through questions real quick. And I'll hang out here if anybody else has questions for a couple minutes. So Debbie is asking, do I touch on inventory using QuickBooks Point of Sale and how it transfers data to Enterprise? So I can do a webinar on that. We absolutely can. We're actually adding, Debbie, too, in the next couple weeks, we're adding all of our POS training that somehow we didn't have in our YouTube channel to our YouTube channel. So there's going to be videos specific on that in YouTube as well. But I will add it to the list. And then Jill said, try to upgrade 2022 in October. Had several issues. Intuit said there's issues. Yeah, so always happens, right, with the new products. But I haven't seen this one today. So definitely let us know, Jill, which issues you've had. It would be great to be able to share that with the audience as well. I know Field Service Management is having a sync issue with 2022. I'm assuming it's because of the 64-bit stuff, right? They had to do quite a bit of rewriting. Toby asked, is that receive not invoice account sometimes generated as an inventory offset account? So it's always called receive not invoice, but because you can rename it, somebody might have called it inventory offset. We might have done that internally. Like I like calling it inventory offset account. If you edit the account when you're inside of QuickBooks, if you go into the account and edit it, right, Control E, and you cannot change the account type, that's a pretty good sign that that is your receive not invoice account. And also too, it has this description in it because a lot of people don't mess with descriptions too. I took a file that had enhanced inventory turned on, but it wasn't set up or used properly, so I had to go back and change every single PO. Had to change. Okay, wait. But the transactions I've had to change don't disappear after I've selected the related transaction. So Toby, we'd probably have to look at that with you. So if you want to shoot me an email after this, we can set up a time to do a consult and take a look at that with you. Because they definitely should, when you go into reconcile, when I hit reconcile now on this, because I've checked off those two, when I go back and do reconcile again on the receive not invoice account, those transactions should not be there, right? Those 375 that I just cleared off should not be there. Okay, cool. All right. Again, I apologize today. I cannot believe this enhanced inventory receiving has been around for years. I've done trainings on it, like at conferences for years, never had any issues, but today, the new year, right? All the things. Okay, guys, I don't see any more questions coming in, but definitely let me know if you have anything else. Shoot me an email, and I hope everybody has a wonderful and safe new year. Take care.